A few decades ago, a brokerage firm marketed itself with the memorable slogan, "When E.F. Hutton talks, people listen." Today, that slogan finds its true resonance with the billionaire investor Warren Buffett. It's no wonder that when he speaks, the financial world pays attention. With a track record that speaks volumes and a reputation for sound financial judgment, Buffett's words carry significant weight in the world of investing. And it gets even better when it comes to dividend stocks. In this video, we will show you the cream of the top stocks from Warren Buffett's Berkshire Hathaway portfolio that have some of the highest dividend yields in the market. We'll show you stocks that can pay $2,000, $5,000, $10,000, and $50,000 per month in the long run. In the end, we'll show you a stock that has the potential to replicate the infamous Warren Buffett Coca-Cola position with the potential to pay over $100,000 per month. Investing can seem complicated, but let's break down Warren Buffett's approach into simple steps. The Buffett Way. Warren Buffett doesn't rush for quick money. He believes in growing your wealth slowly over many years. Second rule, know what you invest in. If you don't understand a company, don't invest in it. Buffett isn't a big fan of tech companies because he likes to stick with what he knows. Buffett also loves a bargain. He thinks buying stocks when they're on sale is a smart move. And lastly, Buffett usually goes against the crowd. This one's a bit daring. Buffett buys when others are selling and sells when others are buying. It might feel strange, but it can pay off. Buying low and selling high is how you make money in the long run. This brings us to the infamous Coca-Cola effect. Before looking at Warren Buffett's top stocks, we need to know how his long-term game pans out. And there's no better long-term example than his Coca-Cola position, something we like to call the Coca-Cola effect. Coca-Cola is a stock that Warren Buffett has held for a very long time. In fact, he's had it for 33 years. During that time, the stock has gone up a lot, more than 2,000%. Back in 1989, he bought about 23.35 million shares of Coca-Cola for $1.8 billion. Berkshire Hathaway's book value in 1989 was $4.9 billion, which means Coke stock comprised more than 20% of Berkshire's net assets. Even though Coca-Cola's current dividend yield is 3.25%, Warren Buffett is receiving an annual dividend of $736 million on his initial investment of $1.8 billion, which equates to a 40.8% dividend yield. The question is, can John recreate this? For this to work, John has picked 6 of the best dividend stocks from Warren Buffett's portfolio, each with a higher monthly income in the long term. Starting at number 6, we have American Express Company. Known by the ticker symbol AXP, this is an attractive stock on multiple fronts, both from a dividend and capital appreciation perspective. Currently, it offers a dividend yield of 1.59%, but most importantly, as we saw in Warren Buffett's Coca-Cola effect, for long-term investment, it has an impressive compound annual growth rate of 10.44%. Based on this, if John invests $10,000 and takes the long position with dividend reinvestment, in 10 years, his investment will be valued at $28,277, paying an annual dividend of $2,792. Give it 10 more years, the same investment after 20 years will grow to $78,555, with an annual dividend of $7,693 or $641 per month. American Express, a financial powerhouse since its founding in 1850, not only reigns as a global leader in payment cards and travel services, but also stands out for its impressive dividend track record spanning over 4 decades. This solidifies its reputation for financial stability and commitment to rewarding shareholders. So, it's no surprise American Express stock makes up 7.6% of Warren Buffett's Berkshire Hathaway holdings. Buffett's investment philosophy centers around long-term value, and his continued interest in American Express signals confidence in its financial strength and growth potential. Supported by robust financials, a solid $33.4 billion cash reserve-packed balance sheet, and a worldwide market reach serving millions, American Express delivered a healthy revenue of $52.8 billion last year and a healthy net income of $7.4 billion. These factors, combined with the company's ongoing innovation and customer-centric approach, make American Express an enticing choice for both income and growth-oriented investors. Next, we have Moodys Corporation. Known by the ticker symbol MCO, this stock offers investors a current dividend yield of 0.98%, accompanied by an impressive compound annual growth rate of 14.03%. Based on this, if John invests $10,000 with dividend reinvestment, in 10 years, John's initial investment will grow to $39,707, paying an annual dividend of $5,115. After 20 years, the same investment, thanks to capital appreciation and dividend reinvestment, will be valued at $157,668, with an annual dividend of $20,309 or $1,692 per month. This company is a global leader in credit ratings, research, and analytics services. Warren Buffett's Berkshire Hathaway recognizes the company's importance in the financial markets, holding a significant stake in the company. Backing its attractiveness as a long-term dividend stock are Moodys' robust financials. The company maintains a solid balance sheet with healthy cash flows that support its dividend payments. Last year, the company reported a total revenue of $5.4 billion and a net income of $1.3 billion, reflecting its strong financial performance. Not to mention, Moodys has consistently paid dividends for 22 years and increased dividends for 13 consecutive years, showcasing its commitment to returning value to its shareholders. The company's pivotal role in helping investors and institutions make informed financial decisions positions it for continued growth in a dynamic economic environment, securing itself as a need in the moving economy. Next, we have HP Incorporated. Known by the ticker symbol HPQ, this stock is a big player in the world of computers and printers. Currently, their dividend yield is around 4.08%. Over the last few years, the stock has been increasing its dividends by about 12% annually, which is pretty good. If we stretch it out to 5 years, the growth rate is still solid at 13.51% per year. Stretch it out to 10 years for long-term investment, and we see that this stock has compounded its dividend growth at about 15.35% every year. Based on this, if John invests $10,000 with reinvestment, in 10 years, his initial investment will have grown to $45,099, with an annual dividend of $6,306. Over a 20-year period, the same investment, benefiting from both capital appreciation and dividend reinvestment, will be valued at an impressive $203,394, paying an annual dividend of $28,441 or $2,370 per month. HP Incorporated has consistently increased its dividends with an annual growth rate of around 16% in recent years, remaining strong at 12.9% over 5 years and about 15.35% over a decade. As a global company, approximately 2/3 of its sales occur outside the United States. Most importantly, the stock has paid dividends since 1985 on a quarterly basis. Profits-wise, the company ranks at 8 out of 10, having maintained positive profits for a decade. Growth prospects also score 8 out of 10, with revenue and earnings both increasing at impressive rates, 15.9% and 13.8% per year respectively, surpassing many competitors. Next, at number 3, we have Visa Incorporated. Known by the ticker symbol V, this corporation is one of the biggest players in the payments processing industry. They handle electronic payments like credit and debit cards, which most people use instead of cash these days. This industry is growing a lot, with predictions that it could make over $3 trillion in revenue in the near future. As for the dividends, Visa's dividend yield is currently around 0.7%. That might not sound like much, but it's because their stock price has been growing a lot. If you invested $1,000 in Visa 10 years ago, it would be worth around $5,500 today with dividends reinvested. But the wave is not over yet, because the stock has a 10-year dividend growth rate of 18.49%. This means if John chooses to invest $10,000 in this stock, after 10 years, his initial investment will grow to $60,954, paying an annual dividend of $10,079. Extending the investment horizon to 20 years, the same investment will have grown substantially to a total value of $371,542. John will receive an annual dividend income of $61,438 or $5,199 per month. Visa is also known for increasing its dividend over time, and they have room to keep raising it because they only use about 20% of their earnings for dividends. This is a good sign for dividend growth. In terms of stock price, Visa's shares have gone up by 29% since last year. But even with that rise, their stock is still reasonably priced compared to similar companies in the industry. Their valuation looks sensible, and their financial health is solid. They're a strong player in a growing industry. Now we move on to stocks that can pay over $20,000 per month in the long run. And in the end, we will show you a stock that can pay upwards of $100,000 in dividends. At number 2, we have MasterCard Incorporated. Known by the ticker symbol MA, MasterCard is another big company that deals with electronic payments like credit and debit cards. They've been around for over 50 years, and their network connects people, businesses, and governments in over 210 countries. When it comes to dividends, MasterCard has a history of doing well. They started paying dividends in 2010, and since then, they've been increasing them regularly. Right now, their dividend yield is about 0.65%, which isn't super high, but still good. For long-term investment, they have a 10-year dividend growth rate of 28.44%. Based on this, if John invests $10,000 and takes the long position with dividend reinvestment, in 10 years his investment will be valued at $156,027, paying an annual dividend of $37,483. That's $3,123 per month in just 10 years. Give it 10 more years, the same investment after 20 years will balloon to $2,434,454, with an annual dividend of $584,838 or $48,736 per month. One reason people like MasterCard is that it's part of a growing industry. More and more people are using electronic payments instead of cash, and MasterCard is a leader in the field. They are expected to continue growing, which could mean more profits and potentially higher dividends. Financially, MasterCard looks strong. They have low debt compared to their equity, which is a good sign for their dividends' sustainability. They also recently expanded into cryptocurrency, which could bring in even more business. And now the last pick of the day with the potential of the infamous Coca-Cola effect. Bank of America Corporation. Known by the ticker symbol BAC, this stock stands out as a dividend powerhouse, offering investors a generous current dividend yield of approximately 3.53%, accompanied by an impressive compound annual growth rate of 36.53%. This combination makes it an enticing prospect for a diverse range of investors, whether you're seeking income or growth. But before showing how much John can earn in dividends in the long term, let's see why this stock is in Warren Buffett's portfolio. Founded in 1904, Bank of America is a financial titan in the United States with a global footprint. The company's diverse operations encompass retail and commercial banking, wealth management, and investment banking services. Last year, it reported a total revenue of $115 billion and a net income of $26 billion, highlighting its robust financial performance. Bank of America's future outlook remains optimistic, driven by its extensive customer base and strategic focus on digital banking innovations. One notable aspect of Bank of America is its extensive history of paying dividends, spanning nearly 5 decades, underscoring its unwavering commitment to shareholders. To top it off, it's been increasing its dividend massively for 13 consecutive years. So, how much can it pay in dividends? Based on the 10-year CAGR of 36.53%, if John invests $10,000 and lets his investment grow with dividend reinvestment and capital appreciation, in 10 years, his investment will be valued at $225,051, paying an annual dividend of $60,215. That's $5,018 per month. Give it 10 more years, the same investment after 20 years will grow massively to $5,064,794, with an annual dividend of $1,355,137 or $112,928 per month. So, we could say that Bank of America could possibly be John's next Coca-Cola effect stock. In this video, we covered 6 buy and hold forever dividend stocks from Warren Buffett's portfolio. But you may want to gain both in the short term and the long term. For this, watch our video on how to invest $10,000 for massive dividend income, where we combine stocks and ETFs that have consistent income in both the short and long term.